Hello, everyone. Welcome to Power in Numbers Live. Today, this is the April Live, so it's April 30th, 2025. So I am so happy that you are here and joining me. If you are here, let me know in the comments. Let me know where you're tuning in from. I love to do these live shows. I do them on both YouTube, and this is also streamed over on Facebook. So wherever you're watching me from, say hello. And I like to know where you're watching from. And if you're watching this on replay, say hello as well so that I know you watched this on the replay. So we just do this once a month. This is a great way for me to be able to talk about topical things that are happening that are affecting small business owners right now. So a lot of the content on YouTube is going to be more what we call evergreen topics that people are going to be searching for a long time. But I love to also connect with you live. So hi to everyone who is here. Let me see who we have here in the comments. I see my team. Danielle is here for my team. Hi, Joyce from San Diego. Typically, I would say I'm jealous of your weather, but we actually have beautiful weather here today. I'm jealous of the fact that you probably don't have the allergies that we have. Paula is here from Michigan. Hi, Paula, watching us on Facebook. I hope you guys are doing well. I'm so glad to have everybody here. How cute is your family picture, by the way? I'm loving the coordination. I'm sure they just went along with that without complaining at all. Okay. So today, Power in Numbers, I'm really excited for this one. We're going to talk a little bit about the economy. So there are a lot of things that we can get into here in a minute, but before we do, I need to thank our sponsor for today. So today, our sponsor is the Run powered by ADP payroll and HR platform. So it's got payroll, it's got HR, it's got all the things that you need. And I use it personally in my business, so I can speak specifically to Run, and I've loved just the relationship that I have with them, and it has really made running payroll super simple. So if it's something that you're interested in, if you're needing a new payroll provider, or maybe you're looking to hire your first employee sometime, make sure to check out my full review of the Run platform. It's going to be posted right now by my team. I have a full YouTube review where you can see inside and see what it looks like. And that way, again, it's all about not having to worry about things come payroll time. They're going to file all those reports for you, all the things. Here is where you can find that. So definitely go check that out. And also, if you want to get started on the Run platform, then just use my link and you'll get 3 months free. So you can get a quote using my link. My link is going to be shared also in the comments, so you can go check that out and sign up for Run if it feels like a fit for you. So thank you, Run, for sponsoring today. We really appreciate the Run platform and everything that they do. All right, so let's jump on into it while we can. All right, so I'm not going to forget today. I tend to always forget, but I'm not going to forget my intro slides today. Hang on, here we go. It's also my chance to grab a sip of coffee, so that's why I like them too. They feel fun, but also that's my chance to get that sip. So also here is that link for Run, by the way, for the Run platform. If you want to go check it out, jamietrull.com/ADP Run. Okay, so let's jump into our news. I know, I'm so like, I love it so much. That's when I have too much time on my hands. That's what I do. Very, very value added. Okay, so what I really wanted to talk about today was kind of economic news. So there's a lot going on. There's a lot of talk. Oh my gosh, there's so much talk. And there's a lot of, various different perspectives on things. There's a lot of freaking out, a lot of worry. And I understand where that's coming from. So we're going to talk about that a little bit today, specifically as it relates to small business and like, should we be worried? And there's so much chatter out there about things. And I am very much a person that says, let's look back at the numbers, right? What are the numbers actually telling us about what's going on with the economy? And remember, some of these numbers are going to be lagging indicators. If you follow me, I've talked about this a decent amount, where we've got lagging indicators, meaning there are things that have already happened, right? So we're looking backwards. And so at that point, a lagging indicator doesn't really help us that much. It helps us determine what has happened, but it doesn't necessarily tell us what's coming. And so we need to look at some of those lagging indicators because they give us a view of what's going on right now, but also the leading indicators, which tell us where are we going, right? How are things looking? How are they trending? And those leading indicators will give us a view into what's happening in the future. And as a small business owner, we need to be keeping a pulse on that. There is pretty much no business that is fully insulated from economic ups and downs. You may be to some extent, but eventually things will tend to affect you either to the negative or the positive. There are actually some businesses that do quite well during economic downturns, and that was even true with COVID. So it doesn't necessarily mean that a one size fits all is, but we need to be paying attention to what's going on out there so that we can be prepared, not so that we can freak out, not so that we can complain about it online, so that we can be prepared and figure out the best course of action, right? That's what we need to be doing right now. So let's talk about some of the numbers, and I'm actually going to give you some links that you can take a look at in your own time. There are some really great sources of numbers. I love this site. I'll show you what it is, but it's basically this trading economics site that has a whole bunch of different data that is compiled together into one place, which I love. So let's pull up the first one. I'm going to pull up first the retail sales report, because that gives us a view of, are people buying things, right? And that is going to, again, affect different businesses in different ways. But if people stop buying things, that's not generally a good thing for small business. So let me jump over here really quickly so that I can present this for you. Share screen. Okay. Here we go. So here is, like I said, this is from a site called Trading Economics. Hopefully you can see this reasonably well. But this site has a ton of different things. So if you come over here to the side, you're going to see all these different sections and different data that they pull from. So you can click through and get a better picture. And Danielle, of course, has gone ahead and shared that. So if you want to go ahead and just click on this and look at it while we're looking at it, especially if it's small on your screen, then that might be a good idea. So what is this saying? This is saying that retail sales actually went up in the month of March, so that we have data through the month of March now. We should soon have data through April. So that's going to also, tell us what is coming. So that should be coming within the next, week or two. But for the retail sales in the month of March actually were up. And so that was actually something surprising. Again, I've heard, anecdotally from so many business owners telling me, well, sales are way down. Sales are way down, whether they're product-based, service-based, people are being more cautious. They're not buying as much. So it really surprised me when I looked at this number to say, okay, but sales are actually up. People are buying more. However, when you dig deeper, and this is why it is important to dig deeper, right? When you actually dig deeper, you're going to see that it's driven by mainly a 5.3% increase in motor vehicle and parts sales as consumers appeared to rush purchases ahead of impending auto tariffs. So that made a lot of sense to me. And the reason that made a lot of sense to me is because I don't even need a new car, and I was considering buying a new car this quarter. I literally asked my husband, should we start looking at cars? My car's 10 years old. It's been around the block a little bit, to say the least. It's a minivan. It can live forever. But we weren't even thinking about a new car until the tariff situation happened. And we realized, is this going to affect us to the point where we might need to consider buying a car now, because significant tariffs could impact even if they're made here in the US, right? And this is the one of the misconceptions, even things that are made here in the US are largely using, or at least in part using, parts that are imported. And those imported parts, right, are going to become part of your cost of goods sold. And if those manufacturers, even here in the US, have to pay more for those parts to make those cars, the price of the car is going to go up, right? That's just, we know this, it's how business works. And so I actually was thinking about that. So it was really interesting to me to see that in the data, that people were rushing purchases of cars. And also auto manufacturers were, and not just auto manufacturers, honestly, a lot of different product-based businesses actually accelerated inventory. They bought a lot of inventory. So that was some more data that I searched into on here that really showed that people were essentially buying early and stocking up on inventory before the tariffs went into place, or before they were said that it was said that they were going to. And so this stocking up actually makes it look like, businesses are up, purchasing is up, all of those things. However, we may see the turnaround effect of this, especially depending on what goes on with these tariffs and how things actually shake out at the end of the day. We may see the turnaround effect of this in a couple of months. So that's where this is really more of that lagging indicator, right? It doesn't really tell us where we're going. And in fact, when you dive into what the numbers mean, you might look on the face and say, oh, we're good. Sales are up. Things are fine, right? But where we're going, again, if it's driven by people purchasing ahead of time or purchasing to make sure that they can, get in before the tariffs, what happens when and if that does, come into play. So that's just something to be aware of. Again, numbers can tell us a story, but it's not always the right story. I always say numbers don't lie, except when they do, right? Our interpretation of them matters. So really getting into the qualitative and understanding the why behind it and what's driving it. Because there are other industries that are down, right? So things like furniture stores, they're actually down. So there's certain things that are down, but it's these auto manufacturers that are really driving those retail sales numbers. So let me look at the next numbers I had on here. And just to kind of show that and really reiterate that, I'm going to pull up the total vehicle sales number as well to show you how much it is driving this situation. Let's see. Let me share the right screen. So here is the total vehicle sales number. So again, you can see how they went up a ton in March. And if we go out, let's see what happens when we go here. We can see like we've gone up and up and up in terms of vehicle sales, probably because we were sort of stagnated for a while on vehicle sales too, because prices were so expensive. And so now what we're seeing is the highest level since March of 2021 in terms of how much was purchased. Now, do we expect that to continue? I would say no. I think eventually that will level off, especially once the inventory that was already pre-imported by those auto dealerships. It says it here too. Buyers rushed to dealerships to get ahead of potential price hikes, while automakers accelerated fleet deliveries in anticipation of impending tariffs. So again, this isn't the only industry that's doing this. You may see this in other industries as well. You may be wondering, for example, prices haven't, in some industries, they've already increased, right? Prices have already started going up. But in other industries, they haven't. And that's been surprising because some of these tariffs have been in place for a little while, especially on goods from China. So why is it the case that we're not seeing those price increases just yet, some of us? And the answer is probably this, right? The stocking up on inventory, and when that inventory turns and new shipments need to be made, new shipments we are seeing, which is more of a leading indicator, right? Those new shipments are going down. We are seeing less new shipments as business owners kind of waited out to see what's going to happen, right? So it's really interesting when you just dive into it to see how this is going to play out and know that a number on its face isn't really giving you the full story. So we'll see in the next couple of months. We'll watch and see what happens, but that's just something to really be aware of. And let's see, I had another number in here that I wanted to bring up. Let's look at the unemployment rate. We love talking about the unemployment rate and how that is going. So that's also a great indicator for what's happening in the economy and for any kind of economic view into the future. We can kind of see where we are trending. So, and my team is sharing all of these links, but they're all part of this trading economics. And you can just spend some time, like I spent way too much time clicking through all the things on here. So just to let you know, that's you will lose probably a couple hours if you're a data nerd like me. Okay, so U.S. unemployment rate. So here's kind of what's going on with the unemployment rate. It rose to 4.2% in March. So highest level since November, but it's not really that, like still 4% in the grand scheme of things is not that high of unemployment. Let's look back. And this is where the chart matters. It makes it look, pretty high when you look at this chart. But if you come back over here, you can see actually it looks even higher when you look at the 3-year. But let's see what happens if we, So here's where, we've got COVID, which is a little bit of an outlier. When we talk about outliers and statistics, y'all, this is what we're talking about. So it's a little hard to figure out the baseline. Maybe if we go to the 5-year, we can see that we're still, in the range of kind of normal, right? Now, again, we need to watch this and see where it goes. And we need to see kind of how that's working out in various different industries. It's going to change by industry. But right now, unemployment is looking kind of steady. There's not really anything like overly alarming in the unemployment numbers yet. But again, unemployment is a lagging indicator, right? By the time we see it, those layoffs have already happened. So it's something that, we may have some economic indicators. There's been a lot of things in the news about layoffs and various different things by various different organizations. So we can see that. Now, there was actually an increase in net jobs last month as well, meaning we increased the number of jobs. I think it was an increase of about 155,000 new jobs were created. That was mostly, when you look into the numbers, it was mostly larger businesses that were hiring, less so small businesses. So it does look like small businesses are still hiring, but maybe at a lower rate than they were before. Again, because there is more uncertainty out there about what's going on economically, what's going to happen with these tariffs, how is all of this going to impact and roll out. So uncertainty, and this is what I always say, regardless of whether you're, pro-tariff, anti-tariff, whatever your thoughts are on the subject matter, right? Uncertainty is where we're sitting right now. We're sitting in a place where we don't know how much a good is going to cost tomorrow versus, much less 6 months from now, much less 5 years from now, right? So it makes it very difficult for decisions to be made in business, meaning typically that's where they are going to start holding off on making new investments, like hiring people, right? Or, innovation, even things like that, that in more certain times, not that we ever really have certain times, let's be honest, but in more times of plenty, right, where there's not as much uncertainty, you're going to see more business investment into things like that, right? And that helps to spur an economy. In uncertainty, what do, right? In our regular life, what do we do in uncertainty? We kind of hold our breath and we wait and see. So when everybody collectively is waiting and seeing, right, we may not have a lot of, layoffs. I think that's coming, but we may not have a ton of hiring either. We have a lot of just, let's hold our breath. Let's not make any decisions yet. And that can really chill an economy. So that's kind of my concern, is that because of this uncertainty is just the enemy of business in general, whether it's big business or small business. I think that's where we're sitting right now. And we really need to have a little bit more certainty in order to encourage businesses to do the things we need them to do to keep the economy running, right? And as small businesses ourselves, we probably understand that. I just hired 2 new people, so I'm trying to kind of live into like where we're going and not be too concerned about it, because again, while we need to watch the economy, we need to remember that our business is separate from that. Again, there are plenty of businesses that do quite well in downturns if we can be resilient, if we can really, I don't want to use the word pivot because y'all, we heard it enough, right? But there are ways that we can adapt. Adapt is a better word. We'll use adapt to kind of the changing circumstances, and really be ready for whatever comes next. Okay. So hopefully that was helpful. I'm gonna look and see if I have any other, I did want to also, I'll share this too. The NFIB business, what's it called? The Business Optimism Index. So I love the NFIB. I partner with them. I'm doing a webinar for them actually in early June. So make sure to join that. But here, let me present this one. They do a small business optimism kind of, survey. And so that's also interesting because sometimes it's less about what's actually happening and more about what we feel like is happening, right? Like, does that make sense? Where it's not always like, we can look at the numbers all we want, but if we are having trouble like paying our bills, or if we're not seeing those sales, or if we're not, things aren't going specifically well for us, it's about how it feels to us specifically. So the NFIB did have a big fall in the optimism survey in March. So again, you look at the numbers and you're like, actually, they're not that bad. But why did optimism fall? Well, because we're looking at our own situations, and uncertainty is obviously going to impact optimism, right? We're not going to be optimistic if we're uncertain about things. So it doesn't surprise me that we have fallen quite a bit in terms of our business optimism and what we believe to be true, especially when we compare it back to even like November, December. Let's look even farther out and see what we can see. So, we've had some pretty high business. Interestingly, look at this business optimism. This is really interesting to me. Towards I guess maybe this optimism was, as COVID was kind of, not ramping down, because we know it lasted longer than we thought, but we had some actually pretty high business optimism back in September and October of 2020. And then it kind of took a dive, probably when we had, the next round of COVID and all the things going on. And then we've been actually pretty low for a while. And then we got high, and now we're kind of falling again. So this business optimism is up and down. But again, I think a lot of this fall, and it's a pretty fast fall, is due to a lot of the uncertainty that's happening around things that are going on, and just kind of we're guessing what to do next. We're trying to figure out, we don't have all the information. We don't know how things are going to shake out. In fact, we don't even know, the taxes, the Trump tax cuts that were from 2017, they expire at the end of this year. So the Tax Cuts and Jobs Act, that's where the qualified business income deduction, that's the thing that's probably most impactful to small business owners. That's part of that tax plan. And that expires at the end of this year. Will it be renewed? Will it not? I don't know, right? We'll have to wait and see. And so there's just a lot of wait and see. And when it's hard, I'm a CPA, I like to be able to project my tax bill. It's really hard to do right now when I have no idea, what's coming next. So I can prepare for this year, but after the end of this year into next year, I have no idea what even the tax landscape is going to look like, and neither does your tax preparer. So that makes it really difficult, again, as we're factoring in all the things we need to know to make a decision. We don't have all the facts. And so we just have to make the best decisions that we can. So anyway, I love to hear your stories. So let me know in the comments too, how are you feeling right now? How does this resonate with you? Are you worried? Are you not worried? Are you, how are things feeling on your side of things? What are you seeing out there in the marketplace? If anything, share your experiences, because I think it helps show that we're not alone, and it gives kind of an idea to what's really going on an individual basis that the numbers can't necessarily capture, right? Okay. All right. So that was fun. I love talking about this stuff. I get really nerdy. These are the conversations my husband and I have. I'll go down an economic rabbit hole. Okay. Grandma Kitty, I love it, says cautiously concerned in wait and see mode. I think that's not a bad place to be, right? The cautiously concerned, not overly, not panicking, not I'm going to sell everything that I have, but, just kind of okay, let's sit back a minute and just see how all of this shakes out at the end of the day. And in the meantime, there are things that we can do, which actually brings us to our next section. Hold, please, which is coming in a minute. I need a producer to come do these for me. Okay, so here's the thing. There we go. Our to-do section. So this is really where we're typically talking about, what do we need to be doing right now? Let's look at the time it is in the year. From our business finance perspective, what are the prudent things to do? What are the deadlines we need to be aware of? All of those different things. And here in a minute, I'm going to talk a little bit more specifically about what that means from kind of the economic piece that we just talked about and touched on, and what you can be doing right now for that. But first, let's talk about kind of some of the deadlines and typical things that we're talking about. So tax time deadline has passed. If you fell asleep, if you ripped bin winkled it all through the last month, the tax deadline has come and gone. If you filed your taxes, good for you, it's done. If you haven't filed your taxes yet, it is extension season, but don't wait, right? This is what I typically tell people is, it's just not worth it to wait and then scramble in say September, October. Just go ahead and get it done now. And then you'll feel better going into summer, right? Just get it done. Even if you extend it, doesn't mean you don't have to wait until that extended deadline just because you extended. So go ahead, get it done. And I know like this time of year always feels like there are all the reports and things we need to remember. So there are so many different tax filings, all the things, we're getting notices in the mail of some random state tax we forgot about. Even that has happened to me. I was looking around because I probably have one around here where there's some state whatever that I forgot about and I have to take care of. So if that's you, it's not just you. That is kind of a collective feeling. But today, as a reminder, it is April 30th. Does anybody know? Gold star. If you can say it in your head, just say it out loud. What is today? What's due today? And if you said it's your quarterly, your Q1 first quarter 941 filing for payroll, you would be correct. So if you run payroll, if you have any employees, or if you're an S corp that's paying yourself, you have a quarterly 941 that is due. Now you may not have known, especially if you're working with a payroll company. I don't really pay close tabs to my payroll deadlines because I don't need to, because I have a payroll company. In fact, I have a payroll company that is listed up here. Hopefully I'm pointing the right way. No, dang it. I always point the wrong way. Up here, run powered by ADP, which is my payroll platform. So they take care of all that for me. So that's a great way to just mention the fact that if you are still doing payroll by hand, and I actually know a lot of people that still do this, go use a payroll provider. You don't have to worry about all the things. They're going to file all of the reports that you need. They're going to simplify the process for you and make sure that those 941s get filed. Okay, so definitely check that out if you haven't already. Remember that link that I shared earlier, jamietrull.com/ADP run is where you can go check it out and get 3 months free for signing up. Okay, so now what else are the to-dos? Those are the big kind of deadlines that are happening, the tax deadlines that are looming. You also had your first quarter estimated taxes were also due April 15th. If you haven't paid them, you can go ahead and do that. Or if you are, running payroll, just to kind of mention payroll again for, run, one thing that I do is I actually just withhold more on my paychecks. So I do my best to, I have a paycheck through my S corp, and rather than having to deal with all of the, estimated taxes and things like that throughout the year and having to remember to go to the IRS site and make those payments, et cetera, I just withhold extra from every single one of my paychecks. And in fact, I don't really get much of a paycheck for that reason, and that's okay because I take onerous draws instead. However, most of my paycheck does end up going towards the taxes element, and that's something that you can do and you can adjust on your W-4 if you're using a payroll platform like the Run platform. Okay, so let's also talk though economically. Like that's okay, we got the due dates, all the things, but like what do we need to be doing right now? Right, when we're in this wait and see mode, like what is it that we need to be spending our time doing? Not just waiting and seeing, like we're not just chilling, watching Netflix, although that's fine too. We've been watching Paradise. Anybody else? That's like my new favorite show right now. So you can still do that, but also spend some time in your numbers. I always talk about this, but it's even more important in times of uncertainty. So if you don't know your cost of goods sold, right? If you haven't really done time to look at it and look at your margins in a little while, this is a good time to do it. It may mean it's time for price increases, or you need to think about that in the near future, at least for new customers, right? What we don't want to do is have business owners, oftentimes we end up bearing the brunt of it, right? The big corporations are, no problem raising their prices, and yet we end up, paying those tariffs and not passing that on. And again, not that you have to, right? But just remember, you need sustainable profit margins. So if you're going to be in the negative, right, or even close to it, if you keep your prices as they are, and now you're paying, like in some cases, over 100% tariffs on the things that you're importing, that's probably not going to be sustainable. You're going to go out of business, right? So you don't need to be the hero in that way. Now you can make decisions on how much of that you pass on, how much of that you keep, but the best decisions are made with the numbers in mind, right? Looking at your profit margins and things like that. And don't think it's only temporary, right? Like I think sometimes we avoid making changes because we assume that it's going to go back to normal. And as we know, inflation, regardless of cause, okay, rarely goes back to normal or negative. Almost never, right? Almost never will we have, a time frame where we go back. Now it may slow, right? Instead of 5% inflation, we might get 2% inflation. But both of those are prices going up, right? It's very rarely, once those prices go up, do they come down. Now, there are some exceptions to this in certain commoditized industries or, things like that. Hopefully the price of eggs eventually, after all of this bird flu and everything like that, will adjust and normalize. But in most cases, prices go up and they don't really come down. So don't wait and wait and wait and wait and assume that things are going to get better. Make sure you're looking and monitoring those profit margins. Maybe you only do that once a year now. You should probably be doing that at least once a quarter, if not once a month, especially if you're in a product-based business, right? And even in a service-based business, you want to be paying close attention to the cost of providing those services, right? So that's something to really know. And look at your cash flow. Project out your cash flow. That's something I do every single week. I have a spreadsheet. You can find it at jamietrull.com / I think it's / cash flow. I didn't put this for my team to put into the chat, but I'm sure they can find it. I have a cash flow spreadsheet that I've made that is literally looking forward, right? Where we can put in what weeks or days do we expect cash to come in? What weeks or days do we expect expenses to happen? And look ahead to see those cash shortfalls. And you could do different scenario analysis. So if you want to look and say let's say my cash, inflows decrease by 20% for whatever reason. What impact would that have? Am I going to be underwater in the future? And you can look and see, I'm fine now, but 6 weeks from now, I'm going to have a problem. And that helps you make better decisions now because you have less options 6 weeks from now than you do today to fix that problem, right? We might be able to figure out ways to move money up, move cash collections up, or delay expenses or reduce expenses. But when we're in the middle of that, that's when we end up getting into situations where we take on debt and things like that to cover the holes and to plug the holes. When if we had foresight into that earlier, we could have planned for it. So I'm a really big proponent of doing that kind of cash flow planning. Again, not from a panic perspective, but just to be aware. And then similarly with that, let's look at our expenses. If you haven't done it in a while, it's a good time to do it, especially those operating expenses, right? This is a really good time to be, taking a look at your operating expenses. Where is your money going? Are there things you're paying for that you're not using? Let's go ahead and cut those, right? Especially subscriptions that are charging us. And I'm thinking of one in my head right now. As I'm saying this, I'm like, I need to go take my own advice. On the personal level, you do this both in your business, but also on a personal level. I bought my daughter one of those dribble up basketballs for Christmas. And silly me got sucked in by a Facebook ad. And now I've been paying $15 a month. She has used it one time, and I've paid $15 a month for the last, 5 months. So I'm going to go take care of that directly after this because that's ridiculous. So go look at your expenses. What are you not using? Let's go ahead and take care of that now. Let's not wait till, we're in crisis mode. Let's use wait and see mode to also be just general preparation, not out of panic, but just hey, let's try to build up our cash reserves, our rainy day fund a little bit more right now, just in case. You're never going to regret it when you have more cash reserves in case you end up needing it. And if you don't, great. That's amazing. But if you do, it's really good to have on hand. Okay. All right. So that is our to-dos section. And now we're going to get to some cues. I have a couple of questions that were submitted. As a reminder, you can always submit questions to here. Oh, good. My team shared, here's the cash flow worksheet. I was right, jamietrull.com / cash flow. It helps when you have all the short links that I tend to remember them pretty well. I can usually guess if I don't remember. Okay, so if you want your cash flow worksheet, go grab that. It's the one I use. It's literally mine. I created it off of what I do every single week and then decided hey, other people might want this too. You could go pay, hundreds of dollars a month for a fancy cash flow forecasting software that probably gets it wrong most of the time. Or you could get my spreadsheet, which is just a very low one-time cost and have it forever. Okay, let's look and see. We're going on to our cues. So let me cue that up. Cheers. Okay, so we have a couple of questions. I think I've got time for about 3 today. So these were submitted. My team will put in the comments how to submit your question to the next Power in Numbers Live. So this is a great way to get me to directly answer any questions that you have in this live. So let's see. The first question, and I'll put it up on the screen. These are a couple of great questions, and they also set me up quite well for what I want to talk about here. So this first question was from Sonia. Let's see. So Sonia says, I'd like to, let's see, hang on, I'm going to get it better here. I'd like to hire my 18-year-old son. He would be helping me unload and load items at the flea market on weekends and when I have to pick up storage auctions units I purchase. I will get, that's so fun. I love what you do. I want to do that. I'm going to spend my time at flea markets. I will be getting a payroll system to pay him. I understand he's exempt from federal taxes up to the standard deduction. Correct. However, he is to pay Social Security and Medicare. Yes, 18 and up. He does not get the exemption. How would that work out? Would I have to pay half of it as the employer and him the other half? How does that help reduce my own self-employment taxes? Okay, let's talk about it. So hiring your kids, y'all, is my jam. We are closing in on summer. It's coming. We're in May-cember right now. So if you're anything like me, it's like total insanity with like recitals and, you know, sports and all the things. My son is the lead in the school play this week, y'all. And I am like, my little mama heart is beaming. He's Charlie in Charlie and the Chocolate Factory. I'm going to die. But anyway, there's a lot going on. But summer is coming, and it's a great time to put your kids to work, not in a like sweatshoppy way and not in like a, you know, crazy influencer type of way, but just in a way to help him, you know, exactly like you're talking about, Sonia. That's like the perfect thing for him to do, to go to the flea market with you and have him pick up storage things, all of those things. First of all, what great skills he's learning. He's going to be able to build those and work with you and make money and help your bottom line as well as his. So really great all around. I'm glad you are thinking about doing that. So how does it help him? So yes, so there's a couple of different ways. So he's still going to get that income tax. So whatever income tax bracket you are in, right? So let's say your total effective tax rate, or let's say your total marginal tax rate, meaning the top end tax rate, right, is 24%, right? Now, depending if he's in school and things like that, if he has other income, he might have more than the standard deduction. But if he makes under $15,000, as you noted, right, there's going to be zero taxes. So the first $15,000 he has paid are going to go from your 24% to his 0%. Right? And that might have been money you'd be giving him anyway for school books or whatever he's, you know, he has coming up, or, you know, money you'd have to hand him to walk out the door to go get gas or whatever, right? So you're going to be able to save that. Now, you won't be able to save self-employment taxes. So how that will work is self-employment is a little bit different, where income taxes, you know, they don't kick in until you hit a certain level. So the first, again, standard deduction is $15,000 this year. So for the first $15,000, there's no income taxes. Not true for self-employment taxes. So the first dollar of income, yay rah, is subject to self-employment taxes, or in this case, it's actually not, since he's going to be employed, it's not self-employment taxes, it's payroll taxes. It's the same thing. Those two things are the same thing. It's just that when it's payroll taxes, i.e. Social Security and Medicare, and you're an employee, you're paying half and your employer's paying half. When you're talking about a self-employed person, I think you said you're a sole proprietor, yes. A self-employed person is paying both sides of that. So you get the full 15.3%, where if you were an employee, you'd only be paying 7.65%, and your employer would pay the other half. So in this case, yes, you hire your son, he is over 18, so he's not exempt from Social Security and Medicare like he would be if you hired him to your sole proprietorship if he was under 18. However, right, you're going to do that through your payroll software. So your payroll software will withhold just Social Security and Medicare from him. It likely, depending on how you set up kind of your W-4, it shouldn't really withhold much in terms of income taxes from him, but it will withhold those Social Security and Medicare taxes. So he will have to file a tax return at the end of the year. Again, it'll be pretty simple. He'll just be reporting the W-2 income that you paid him, unless he has other sources of income. But again, Big benefit being now you have shifted your income tax. You still get that income tax benefit. And you also are exempt from federal unemployment taxes until he's 21. So those aren't, they're not like huge. It's not like a huge savings, but you don't have to pay any of that. So it's just taxes you would be paying anyway, right? You'd be paying that 15.3% whether you paid him or not. You will have lower self-employment taxes because he's paying for a portion of it, but net, ultimately it's about the same in terms of self-employment, but you're going to save that income tax, if that makes sense. And he can open a Roth IRA and all the fun things that you can do when you have earned income. So plus he can learn some great lessons and you can bond over it all. So it's a great way to really get into the working world and do it in a way that is, safe and helps you bond and helps you, kind of figure out money management, all of those things you can do when you're hiring him. So hopefully that makes sense. The best benefits are for kids under 18 because of the fact that you're also exempt from Social Security and Medicare if you do it the right way. And that's a big if, especially to those of you who have, S Corps, C Corps, partnerships, or there's the wrong way to do it and there's the right way to do it. So if you want to know the right way to do it, and again, this is where I said, thank you, Sonia, for setting me up perfectly with this question. I got excited when I saw it submitted. I have a masterclass coming up next week. Live masterclass next Thursday, May 8th. I am doing it one time. We will put it on Encore after that, but if you want to be live and get your questions answered and all of that, you want to be at the live one next week because I'm only doing it once because y'all masterclasses kind of take it out of me. Like I could do this all day, but a masterclass takes it out of me. I have slides, all the things. So I will do it one time next Thursday, May 8th. And so my team will, they already did. Here's where you go to the this is our pay, hiring your kids 101 masterclass. We're going to get into all the nitty gritty and I'm going to take your questions at the end. So JamieTrull.com/masterclass. So go check it out. Make sure to join. We've already got tons of people. Like we have hundreds of people registered already, which is incredible. It's going to be big. It's going to be awesome. Okay. So in the same vein, I'm going to call you, so Arnulfo, or I don't know if I'm saying that, I'm going to call you Arnie. Hope that's okay. Arnie says, all right, another question similarly. My net income is not high enough to take advantage of the tax deduction for hiring my kids. Might not even be worth taking this deduction. However, I do want to pay my kids to contribute to a Roth IRA. Can I just write them a check for my business account without having to set up payroll? All right, so if you want, here's the thing. So to set up a Roth IRA, you do have to have earned income, right? So if you are ever audited and they want to prove out that you were able to, contribute this money to a Roth IRA, what do you need to do to show that you have earned income? Probably not just giving your kids cash because they're going to assume that was just, normal parent, a gift or whatever, right? It's papering it through a payroll company typically is what I recommend, right? It's going to make it stronger for audit purposes. And it's going to be able to prove out why they had earned income. So if you do it this way, I highly recommend there, again, like it's cost benefit. So I don't know how much you plan on paying your child, right? So it's cost benefit to think about whether it makes sense to do a payroll company or how you want to do that, right? Now, either way you go, I recommend you paper everything, meaning you document everything really, really well. What work did they do? How much did you pay them? All of those types of things. Even if you don't take the business deduction, although I recommend taking it, I don't know why you wouldn't, right? So if you just make sure that you are documenting all of that, and then make sure that you're issuing a W-2 at the end of the year. And again, that W-2 can be proof that yes, you actually paid your child these amounts. Now, I don't generally recommend just doing a W-2 and not doing all the payroll because, and here's where it gets a little sticky, like it can be it potentially can be a little bit of an audit trigger if you file a W-2, but you haven't filed quarterly 941s, right? So that's why I typically recommend like, hey, if you want the stronger proof you have, especially if you're wanting to, substantiate that this is truly earned income, is to have a W-2. And if you just do a W-2, right, if you're paying cash or whatever, and you just do a W-2 at the end of the year, then you might get yourself in some hot water if, the IRS is matching things up and says, well, wait a second, here's a W-2, but there's no 941s. So it's really kind of a question of risk tolerance at the end of the day. Can you do it? Yes. Do people do it? Yes. Can I recommend it as a CPA? Probably not, right? But that's a decision on your own risk tolerance. Now, I will say, if you have any, and here's the thing, even if your net income isn't huge, right? If you have any net income, this is going to save you if you put it through payroll. And especially if you do it the right way. I think you said you're a sole proprietor as well. So what that means is, again, the question Sonia had was a great one to lead into this one, because Sonia asked about self-employment taxes versus the income taxes. So even if it's not really going to save you much in income taxes, because maybe your income tax rate is a low rate, right? It will save you in self-employment taxes. So again, even if you only have $10,000 in net income, right, you're going to have to pay 15.3% self-employment taxes as a sole proprietor on that, even if you have $0 in income taxes on it because it's below the threshold. So that's $1,500 in taxes you're going to have to pay. If you pay your child and they're under 18, you don't have to pay that. And that's only, so that's just something to think about, is that while it may not matter from an income tax perspective, right, it could still save you on those self-employment taxes that you are paying if you have even $1 of net income. Now, if you're in a net loss position, I get it. Doesn't really matter if you take it or not. Still recommend doing it, but it's going to have less of an impact. But if you have any net income at all, it can save you that self-employment. So hopefully that makes sense and gives you something to think about. But it's very much a cost benefit. And like I always tell people, like if you're going to pay your kid $50 a month, like it's probably not worth it, right? to go through all the rigmarole of all this. If you're going to pay them $500 a month, now we have a different story, right? So it really is cost benefit on what makes the most sense, and whether you want those business deductions, whether you want that proof to be able to open that Roth IRA, or if you're just trying to give them money so that they have money, right? It depends on your motivation. Okay. All right. Last question is from Laurel. So thank you, Laurel. I love seeing names that I recognize too in the questions that are submitted. So hi, Laurel. Okay, Laurel says, in a recent video, I noticed you have Google in your office supplies software account. I love that y'all are watching me. I demo a lot of times out of my actual accounts, so you can see how I have things set up. I have those separate, and now wondering if there's a good reason to keep them separate, which also makes me wonder if you share your chart of accounts. Betting yours is simpler and cleaner than mine. Okay, so here's my thoughts. Sip of coffee first. Chart of accounts. First and foremost, your chart of accounts should be set up based on what you need to be able to see separately and easily, and what you are going to use in decision making. Bar none. I do not believe the tail should wag the dog, meaning, yes, we need to keep some things in mind from a tax perspective, but there's not just one way to do things. And there are only a handful of things that you need to have separate in separate accounts, because the tax treatment is different. So for example, right, you do need to have business meals in a separate account. Why? Because those are only 50% deductible. You do need to have entertainment in a separate account. Why? Because entertainment is 0% deductible, right? If you're taking a client to go see a ball game, the tickets to that ball game are not going to be deductible. The food you get is going to be 50% deductible. So you want those in the right accounts. In things like cost of goods sold, you want that. But outside of that, it really is up to you how you want to show it. And you want to think about mapping it. Like you can look at like what, if you're a sole proprietor and looking to see, you're an S Corp. So you can look at what the categories are in the 1120S just to make sure you can easily map, right? Like you don't want to not be able, you want to be at least as detailed as what your 1120S, or if you're a Schedule C would show, right? But then if you want things broken out further, you absolutely can do that. Now, I highly recommend, don't make your profit and loss 3 pages. When people, the amount of people that come to me and say, I don't understand my P&L, it doesn't make any sense to me. I can guarantee their P&L is probably twice as long as it needs to be, right? Because the point is to give you a snapshot. You can always drill down. All the accounting softwares have a way to drill down if you want to see the details, but the P&L is not meant to show you all the details of every transaction, have every vendor separately and every expense separately in a separate account, because you're going to kind of lose the forest through the trees when you do that. So it's really about what do I want to be able to see at a snapshot that's not going to be so overly confusing, And it may be super personalized to you. So for me, like, yeah, I put Google because it's our email service. All of that goes into kind of the software account, which just the default is office supplies and software, which to me are very different things, but whatever, they go together. That's how they are in taxes. So I've left them together. Now I will break out though, into marketing. I have specific software that's more related to marketing. And so that goes into a marketing account because that's how I like to see it. Does it need to be there? No, you can put it into software. You know, the key is, where does it make sense to you to be, right? And be consistent, because it's also like if 1 month it's in software and 1 month it's in marketing, when I'm comparing my months and trying to understand what's going on in my business and what's happening with my expenses, it's not gonna make any sense to me if I've like been really inconsistent in where I put things. So set up those rules in your accounting software so that you don't have to think about it and remember each and every time, right? I have rules for literally all of my expenses. Like 90% of my expenses are automatically categorized because I've set up rules. And you can do that in QuickBooks, you can do that in Xero, you can do that in FreshBooks, right? You can set up these rules so that you don't have to constantly be thinking about it. But it is really helpful. So I would say, I don't share my chart of accounts, although it probably is in some videos, but it's very specific to me. So you're going to see very specific categories for me on there and for my business that may not apply to yours, right? So for instance, like when I'm doing, my chart of accounts, I have divisions, right? And so I have a division. I did a video on Xero where I talked about this, but I have a division that's for my digital products that I sell, right? My templates, my courses, those types of things. And then I have another division that I track separately, the income and expenses related to my affiliate income. And I kind of allocate expenses that are really for both. I can allocate them in the system to kind of be both, but I have it kind of set up, but that's specific to my business, right? That may not apply to anybody else's business, but you probably have divisions on your own that would be helpful. So sometimes thinking about too, like, I used to list all of that out, and there might be a better way depending on the system that you're using to do that, to where it doesn't muck up your chart of accounts, right? And your P&L. So for example, if you're like putting income from this place, income from this place, income from this place, maybe you're like Amazon, eBay, whatever, and each one of those is a different line on your P&L, maybe it would be better. And then similarly, you have different expenses on your P&L for expenses, eBay, expenses, Amazon. Those could be like categories or classes if you're using QuickBooks, or they just got rid of tags. So I forget what they're calling them now. Custom fields, I think now in QuickBooks, depending on which version you're on, or they're tracking categories in Xero. So you can actually kind of clean up your P&L, but then you can run it by tracking categories so you can still see that information at a glance. So I could go on and on. I probably should, you know what, I'm going to write down an idea for future content on the YouTube channel. I'm going to make a video about coming up with your chart of accounts, because I do have a lot of thoughts and feelings about it, and I can show mine on that one too. So thank you, Laurel, for the content idea. That's what I love about kind of interacting with you guys. And one of the reasons I wanted to do the live show is to get more ideas for the things you want to hear about. So I'm going to do that. So make sure if you're watching me on YouTube, subscribe so that you can be notified when that video drops. I sound like a YouTuber. Okay, so that is it for today. Thank you guys for joining me. Again, if you watched on replay, please make sure to drop a comment. Thank you again to Run, powered by ADP, which is the payroll platform that I use and love, and definitely go check them out if you're interested. And yeah, thanks again for joining me. Have a wonderful day, and I'll be back at the end of May. Oh my gosh, are we going to make it through May? I'm not certain. Bye, everybody.